Hey guys, it's Jason with your Hopium Free Crypto channel. Let's talk about something that isn't so sexy, and that is taking profits. What does it look like on a chart? Everyone wants to make massive gains, but I know from experience, most people have no freaking idea what it looks like on a chart. It looks like a bit of a war zone. So I'm going to go through that with you in this video today, give you something practical to use and take away with you. So if you like the sound of that, make sure you stick around till the end of the video and like the video up, subscribe to the channel, bell notification icon so you can be here for the updates of our crypto portfolio. Follow me on Instagram for daily Q&As and Twitter for all of the crypto news. Make sure you get yourself an account. I'm a converted Twitter user. It's fantastic. With that said, let's dive in. The coin market caps, 1.7 trillion. Reminder, our 50% zone is 1.33 trillion. We're still holding above that. Markets can be scared out like they were yesterday. Elon Musk tweets and people lose their minds. Bitcoin fell 10%, now it's back up 5%, thereabouts. It doesn't really matter. That's what I continue to talk about on the channel. So I'm glad you guys are following and you're commenting down below that your trades are getting better. Well, at least your mindset, and then the money starts to flow. That is the biggest game here. It is the mindset. So Bitcoin's at 37,500, ETH at 2,700. We are looking at a 41% BTC dominance, starting to slide back up again. Just ETH 19% dominant, so it's still holding its ground up there as well. Our other big players, Cardano 56 billion, not much has changed since yesterday's video as well. Uniswap 15 billion, and one of the other favorites, Chainlink at 12, slipped a little. Oh, and our big winner is Solana at this point, $41, back up there, 8% up over the last 24 hours and 41% on the week. Fear and greed, 24. This reset just a couple of hours ago. Elon Musk's tweet really didn't do anything to the market. We went from a fear to an extreme fear. But the difference here is a few points. So probably flick down to 25, 24, drops us into extreme fear. That used to set the market off. You can see how the sentiment has changed. And if you're not picking that up and if you don't understand how that's working, keep watching how the market reacts to this sort of news and you'll start to get a feel for what's going on. Today's video, massive gains, massive losses, how you can stop stressing about your crypto portfolio. So as I said, I want to give you something practical. Maybe you already understand this. Maybe it's just a revision for you. Let me know in the comments down below. I did put this on Twitter today, and that's what has given me a bit of inspiration to continue with this in today's video. Basically, you can have 10 trades. Split your portfolio up into 10 different sections. Win 3, lose 7, you can still be profitable. You just need to make sure that your profit targets are set high enough so you don't become a little pussy and sell out with 50% wins, but you're taking 70 or 80% losses. You will always lose at the end of the day in that regard. Even if you're winning 80% of the time and you're taking 20 or 30% wins and taking 80, 90% losses, you're still going to be down at some point. What does this look like in the numbers? $1,000 portfolio, $100 times 10. So we're splitting that up. Now this isn't going to happen, but just absolute worst case scenario, you lose it all, or they rug pull and it absolutely goes to zero, okay? 7 cryptos, 7 out of these 10 go to zero. 3 of those then must do a 300% return. So it's going $100 into $400, aka a $300 profit for 3 of the cryptos. You're going to start with $1,000. You're going to lose $700. Okay, you have to be comfortable with losing in this game. Initial capital, you got 300, so you got 3 trades which are still in profit. Now they are hopefully going to win $300. So that's 3 of them with 300, so now they're at 400. So there's $900 in profit, $300 of initial capital. I hope you understand that maths. Totals $1,200. Profit $200. So you got a 20% profit in this example where you've only won 30% of the time. Now, with the 300% in mind, that's where the market caps come back into play. It's no good looking at stuff like Cardano needing 1,000% return and then hoping for dear life that this goes to $17.50 or thereabouts with the numbers, okay? This is probably not going to happen in this cycle. It could. It very well could, but the chances are getting stacked against us at this point. We need this to go to a $560 billion market cap. Ethereum isn't even there at the moment, and that's just short of where Bitcoin is currently. So you're really stacking the odds against you if you're trying to look for 10x's in these higher cap cryptos. So we're looking for 300%. Could Cardano do it? Probably. Just needs to get to about $758. I think that is doable. You know, around a $250 billion market cap, just short of where Ethereum currently is, and obviously everything else will go up in that case. So that's how I would be looking to structure my portfolio so that I can get these gains in case these go to zero. So these can be safer bets. These can be extreme risky bets like those altcoins, the small cap stuff under 100 million, under 20 million that I talk about on the channel. And I'll show those in just a moment as well. So now that we've got the numbers, we understand what we're looking at when it comes to market caps and why they're so important. Let's take a look at the trade that I've taken a chunk from. And I didn't even get the best prices. I did not buy Zen at the absolute lows of $3. I think I did pick up some at $4 just because it was so low, but I didn't pick up a big bag. It was just like, look, this is $4, let's buy some. The point that I'm making here, and I'll keep it nice and succinct, is when it comes to trading and investing, I just want to take the chunk. I just want to take a chunk out of the market and leave the rest to someone else. Maybe I don't get the bottom, that's fine. It's like buying something secondhand. So if you're going to buy something secondhand and you want to be able to sell it on, you're probably not going to get every last piece out of it to sell it on. You might do it a few times, but you want it to look like there is still something left in that deal. If you're selling on, say you got a car and someone wants to fix it up, if you deck it out completely and you're in the game of selling it on so someone else can fix it up, then you sort of leave a little bit in the deal for that next person so they can do a bit of work to it and hopefully make a little bit of a gain. At least it looks like a good deal. That's the way I've learnt it from other experienced traders. They say you don't need to get the absolute top and you don't need to buy the absolute bottoms. You just want to take a big chunk out of the middle. And that's how I teach it in the Investor Accelerator. So if you want to learn how to do this profitably long-term, link to that is in the description down below. The Investor Accelerator membership. 6 hours of video content to understand what it is I'm looking at here and how to do it. So that's where I'm going with this trade here. So yes, I could be buying it on the breakouts. And what did I do? This is an older one as well. I did buy some of these bull traps. So my average position when I last looked at my numbers was about $17, $18. So somewhere at that level, because I was able to improve my skills learning, buying at these lows, buying at the breaks. So we got a breakout here and then we got another breakout here. And we had a dump back here just to test those support levels. So I could average my position to less than when I got suckered in back here. And basically that allows me then to have a lower position to get the return that I'm after. So now we look to where I could exit. It's around 500%. So the exit looks like a bit of a war zone. It didn't look like just exiting at that exact price. And there's a reason why I would exit there or exited a lot of the position there is because we broke down on the swings. I could see that. But this section also, during the course of the trade, this is the war zone. This is why when I talk about trades or reading charts on a daily basis, this is how I'm able to get in and out of them and not feel emotional about them. But I do see that in the comments, people are like, why would you sell here? Why would you buy here? Why not just hold and run it up? And I just say, yeah, you could run it up, but you have no idea what the hell you're doing and you end up just running it back down. I like a bit of practice with some of them. Sure, I'll leave some other cryptos and not touch them. Bitcoin, just leave it. I don't need to play the market like that because I don't feel like there's enough in the swings for Bitcoin. That's just my position. But here I can sell out. I'm like, look, I've had a massive peak. I think I've gone on a pretty good run from my average price of around $17. You know, this market has gone up 400 something percent from my point. I like around the $60 level for a few reasons through there with swings. I'm happy to take a good chunk here. If the market goes back up, I'm going to hold a position, get out a little more as the market moves up again. So this exited, I was like, sweet, it's gone down. But then I saw this build up. So $60, there's initial exit. It went down, it started to climb again. And then we had this swing and I think, all right, the market's probably going back up. Here is another entry point because it's above this swing high. That's what I want. Okay, so I'm entering on high $60 and I just exited at low 60s. That is the way the game works because I look at this and say there's more in this. I'm okay to take a 10 or 15% hit from that initial position. I'm going to ride this up as far as I can go and not put this new position into a loss because I'm getting in at a higher price. This I can afford the market to go against me. That's fine. You know, I'm up once we break through these highs, and I know it's not coming back to these levels. You know, we break through, it's not coming back to these levels anymore. But here, this is the risky part. And this is where retail starts to FOMO into pretty much anything else that's out there. Dogecoin, XRP, all that sort of stuff. They just buy in as the market's riding up, and there's really not that much percentage left in it. You know, 100% in this case, if we're lucky, 140%. All right, but we're going up, comes back down. Sweet. There's my exit. I'm going to put my stops here. My alerts go in. Boom. Market hits it. I'm out. All right, market bounces back. I could have sold it for higher, but at the end of the day, I just want to take the chunk and move on to the next market. Forget about it. Come back when this is going on. That's what I want. Maybe it doesn't happen this big. Maybe it just ends up being, a little movement across. Okay, sweet. I can buy back in. Maybe I catch it again as it's breaking out again. Sweet. I buy back in and wait for the next run. That's how the trade looks so that I can end up winning in this regard. Now to the losers. Stuff like TVK. This has been a loser so far, but I don't put a ton into these trades at the one time. I am now convinced. I didn't understand that that's what a lot of retail do, but they'll basically look at something and buy it all in the one hit. If that's what you're doing, let us know in the comments. We don't need to point people out, but if you're willing to share that and just say, look, that's what I have done in the past. Cool. Learn from that mistake. Maybe it works sometimes. Essentially what I'm saying is a lot of people sort of see something and buy it. All their money's gone. Market falls. Because, I was looking at this at around 60 to 70 cents. So somewhere around 65 cents. Now we're sitting all the way down here at around 18 cents. So this is a 70% loss at the moment. But I didn't put everything in at this point, nor is this a huge chunk of my portfolio. What I want to see is that. I feel way more comfortable with that, just putting in money all the time, putting in money, because I know this is coming at some point. What retail does, they want to see this already, and then they're convinced that the market is going up. It's already happened. So that's not the way I trade. I want to see this start to level out, then I'll keep going, keep buying. Starts to burst, sweet. Let's get my 400, 700%, whatever it may be for that point in time, and get out and move on. I don't need to marry these things. So TVK, that's the 70% down. Zen is the 400% up, and it's covered any of these other cryptos should I want to sell out of them and move it into something else. So TVK, I'm still liking this one, but I'm waiting for a better entry point at this point in time. The other one's Uniquely. Uniquely is something I talked about just a few weeks ago. If we go on the daily chart, I talked about it somewhere around early to mid-May. And it had a little move, but then we had this big move that was from another YouTuber talking about it, pumped, and now we're well below those prices earlier. This one's down about 35% from the area that I was looking at it. Call it 40%. There we go. So that's where we're at now. That's okay. I'm okay with this one because I still think this project is going to do pretty well long term. And again, I don't go and throw everything into it at that one time and walk away. I'm following these. I've got my alerts. I see this goes down further. Okay, I'll keep tracking until I see some consolidation, and I'll wait to put more in. That's where the patience comes in, and I also talk about that in the Investor Accelerator. As I said, link to that in the description. GODB, another one I talked about back here. I'm happy bringing these up because a lot of people just call them out as losses, and then the funny thing with retail is they'll call this a loss and they get really, really sad. Their profits, their money is down 70%, but they haven't sold it yet. And then it happens the other way as well. They might buy it at this point, goes up 300%. They're super, super happy that they're up 300%, but they don't sell it either. So it's the mentality of new investors. They're extremely thrilled they're up 300% and they think it's going to go to 400 or 500%. They get greedy. And look what happens. Up, all the way back down. That happens, and then they're pissed again. So you need to have a plan, knowing when to sell out. That's, again, a super basic plan. I just want 300% from this crypto. I'll be looking for other things as well, swings and signals, etc. But essentially, this one as well is down 70%. But again, it doesn't destroy me. let's talk about profits. We've gone through these trades. We've waited it out. We've been patient. We've got our profits now. What do we do? Lucky I've got this written up. Put some on a ledger. Basically I want to have a few different positions. I want to hold some for safekeeping, long-term stuff. It just stays there. It's my digital gold ledger. If you don't know how to use it or what it is, I've got a link to that. It's about crypto wallets on the channel. You can find that in the playlist around beginner Bitcoin crypto videos. Okay, so check that out after this. I'll leave links to them at the end of the video as well. So click on those. Next thing, increase trading account. Hold stable coins. Such an easy thing to do. Sell out some. I've got it in stable coins. Put it in crypto.com. Put it in BlockFi. I keep it across multiple different ones, maybe even in Binance. I'm still getting a % return there, but it's not as good, but it's quicker to access. Crypto.com is also quicker to access. BlockFi isn't. So it's maybe like a more longer term position there, just holding the stable coins. They're getting 8%, 10%, 12% per annum on basically a USDT. So, like a US dollar. That's easy. I like that. It's earning some money. I've got profits. I'm ready to go again. Trading account, SwiftX. All right, so these are affiliate links as well, but they're stuff that I use. They're simple things to use. SwiftX, I can keep some on the exchange. I don't advise all of it, but you do what you need to do. And with that, then I'm ready to trade again if something comes up. So what I can do is hold them on crypto.com or Binance or BlockFi. When I see the alerts come up, so I've got my alerts, all right, the market's starting to turn around, then that's my trigger to put some back onto the trading accounts, SwiftX, Binance, get ready to go. So that's how they start to move between the different apps. And you can do all of this from your phone as well. All right, last thing is cash some in and buy it. Just lastly, on the SwiftX, it's ready to go. When I'm ready to purchase, boom, it's done. Crypto.com to SwiftX or to Binance, done. Cash them in and buy something nice. Crypto.com has a card. BlockFi has just come out with a card. You can find the links to that in the description down below. A debit card. So now I've got my profits on there. I can go buy myself something nice. Go to a dinner, whatever it is you want to do. Get myself a surfboard because I'm growing out of the other ones. Anything that suits your lifestyle and whatever it is you want to do. Just make sure you take some profits because that fills up your emotional bank account. You need the financial bank account up and you need the emotional bank account up. I saw someone laugh at that in a live stream once. They're going to lose long term. I 100% know that now. If you don't keep yourself up there, you will fade. If you let your emotional side get burnt out, you can't build the financial side. And some people might just do it without even knowing. They know they need to feel good in order to be making money, and you just don't even care. You just do it. It's just sort of natural. It just works for you. If that is, great. So that's what I've got for you guys today. Essentially, it's kind of like a mix of don't stress about the market, have an exit plan. This is an entry plan. This is kind of like a pep talk. What I do with profits, you can have your own system, but this is just give you some idea of the thought process behind it. Once you've got your profits, what to do with them so that you're still earning some money. There's many other things to do with it. If you wanted to get really technical, I know a few of my friends do get into DeFi and yield farming and this sort of stuff that's earning 30, 40, 50, 60% per annum. Obviously a lot more with a short period of time and then it fades over time. That stuff is cool as well. I just haven't got into it here. I'm just keeping it really simple because this is just like easy stuff that you can almost put on auto mindset for yourself. You just boom, 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 do it. So the other stuff takes a bit more brain power, and of course you're going to get rewarded with it with the gains that are possible. So that's a mixture of a trader's life, entry, exit, what happens along the way, what to do afterwards. I hope you found some value from that video. If you did, you know what to do. Hit that little like button down below. Subscribe to the channel, bell notification icon. Join me on Twitter and Instagram for daily Q&As and daily crypto news over there. Leave us a big like if you enjoy the thumbnails. I'd love that. And I will catch you guys at the next video. Don't forget, all of these links are in the description down below, and I'll see you in the Investor Accelerator if you choose to join us or if you are a member and you're watching these videos. Really appreciate it. Catch you guys next time. Until then, have more fun to get more done.